All right, now it's time to go inside out on retail and specifically Costco. Joining us now is senior markets correspondent here on the network, George Tsilis. George, we're talking Costco. In this stock, I mean, it's been in a downtrend for several months now. And, this is always at the top of everybody's list when they talk retail. What's going on here with Costco, George? Why are we seeing a pullback? This is one of my favorite places to go.
Yeah, so it's kind of an interesting situation. I mean, first off, if you look at Costco performance-wise over the last 5 years, it's been tremendous. But there were some concerns going into the end of last year, earlier this year, about valuation. And I think that has played out. If you look at the price action in Costco since February, the stock hit around 1075. It's been down about 15%. And one of the things I noticed is that if you look at the earnings multiple going back to about 2 quarters ago, just as approximately that time frame they mentioned, the earnings multiple actually was trading around 57 times earnings. Now it's around 45 times. And I think what's happened here, Tom, is irrespective of the fact that sales are expected to be, as they are going to be reporting earnings coming up, around 8% higher, earnings around 6% to the upside, membership fees actually increased in terms of total net income for the business to around $5.3 billion. That the reflection in the stock price isn't necessarily a manifestation of the business itself. I think it really came down to valuation. It was trading at sort of these, lofty tech valuation levels. But if you look at, like I said, the sales and earnings for the business at around the high to mid single digits, that has certainly played out. Right now, if you consider that the price is down since February about 15%, what I did notice too is if you look at the earnings estimates for this year, they've actually risen, by about 15%. And next year's earnings are expected to be around $22 versus the estimated prior 6 months ago or 2 quarters ago, they were expected to earn around $19.80. So over time, Tom, the name has actually improved in terms of sales. Market capitalization has improved. Net income has improved. The price has gone down. And I think what's happened here is we've seen just a general multiple compression in Costco. Maybe it was due, and maybe, again, considering the holiday season, but also how the retailers have performed exceptionally well, we may end up seeing potentially a reversal in this name.
Yeah, you mentioned that we're down 15.7% from those all-time highs that we saw in the early parts of 2025. So this has been a trending lower stock. And you mentioned the performance over the last couple of years has been just spectacular, but valuation comes into play. They report monthly numbers on this. Sales in October, comparable sales were up 6.6%. We'll get more of that over the next couple of weeks into earnings also. But George, you got an example trade for us. Break it down for us.
Yeah, so one of the things about this is, again, it may end up being right now, if you look on the weekly charts, at some level of support right around the 100-week moving average. So what I'm going to do is I'm going to structure going into the earnings coming up on the 11th. Also, seasonality may play out for Costco. Under a condition now, just keep this in mind, that it holds the 100-day moving average. What I'm going to do is I'm going to structure a bull put spread or a put vertical for a credit. This is going to be a December monthly, so it expires in 21 days or the third week of December. I'm basically going to sell a 32 delta put. That's the 885 strike, and then I'm going to buy the 875 strike below that. So this is, again, right below that 100-week moving average. Now, altogether, you could harvest or earn about $3.50 a share or $350 a contract. So the whole premise of this trade is to basically hold, at the very least, the 885 level. That's where your max profit position would lie. You have to consider your return is 350, risk 650. You get about a 53% return on risk, about a 68 probability of percent of profits. And then again, the break even on this trade is 881.5. And then again, if the stock does fall below the 875 long strike position, that's where you'll achieve that max loss of 650. So this is a conditional trade that it'll hold that 100-week moving average and potentially a reversal off that 100-week moving average level.
Yeah, let's break this one down. Out in the December monthly options, George went out 3 weeks in this example trade, selling the out of the money 885 put, buying the 875 put short $10 wide neutral to bullish. Put vertical, you're collecting roughly about 350 credit. The credit you collect is what you can make on this one. As George mentioned, $650 in risk, but these are the trade-offs. You're risking more to make less, but you've got a better probability of success on this neutral to bullish stance. So you can still take a directional bias, but it's more passive, more conservative, with improved probabilities of success. Remember, on a trade like this, stock goes higher, you profit. Stock stays where it is, you profit. Stocks goes lower, you're wrong, but remains above that break even, as George mentioned, of 881.50. You're still going to be potentially profitable on this conservative, passive, bullish trade here. Short put vertical that George brought us. Good example, good look at this example trade. Risk defined, I think, key on such a high price stock here, just like Costco, looking for maybe some consolidation reversal. Remember, it hasn't traded below that 875 level. That's acted as an area of support recently. All right, great stuff. Thanks to George Tsilis, senior markets correspondent here, joining us.